Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stock slide, gold at record highs as risk appetite dampens. Treasuries edge higher ahead of the Fed's favoured inflation gauge. Talking of which, Boston Fed President Susan Collins says the inflationary boost from Trump's trade levies is inevitable. Concerns about the president's reciprocal tariffs next week ramp up. Plus, a Bloomberg scoop, a draft document reveals the US seeking to control investment deals in Ukraine, squeezing out European allies. Meanwhile, a coalition of European leaders reject Russia's demands for sanctions relief. Happy Friday, everyone. So all of the risks around tariffs continues to dampen the mood across the equity space. S&P US stocks, S&P 500 set for the biggest quarterly drop since 2023. Asian markets being hit as well. And I'll take you through that story. European futures pointing lower after the losses of yesterday, currently down 0.3%. Here in the UK, the FTSE 100 dropping 4 points, currently looking range bound in the UK. S&P futures then just up 3 points, pointing to gains of 0.1%. But again, after the losses of yesterday and still on track for losses for the week. Nasdaq 100 futures pointing lower by about 0.1%. A bit of a holding pattern, it seems, ahead of that key inflation gauge. PCE dropping later in the US, expected to come in at 2.5%. Services expected to remain sticky. The Fed's Collins, as we've said, suggesting that, yes, the tariff impact is almost inevitable in terms of the upside inflation. The question is, for how long? The benchmark US 10-year currently at 4.33, just a move of 2 basis points on yields lower, so a bit of a bid for the 10-year at the moment. We'll see how that adjusts around the inflation gauge. Euro dollar at 107, a little softer by 0.1%. Brent at 73.83, down 0.3% on oil, and gold at fresh record highs. Goldman Sachs now has a target of 3,300 per troy ounce for the yellow metal, up 0.7% in the session so far. 40% gain for gold in the last 12 months. Let's flip the board and have a look at the Asian session then. Some bloodletting across Asia, set for its biggest drop in about a month on the tariff risks ahead of April the 2nd. The benchmark down 1%. HS Tech falling 1.5%. The HSI near correction territory. Nikkei over in Japan off by 2.2%. Part of this is about the ex-dividend story in Japan as well as the tariff risk. And the yen currently at 150, a move of 0.2%. Inflation out of Tokyo at 2.5% coming in hotter than had been expected, suggesting the BOJ is still on track for another hike in the next few months. Now, Bloomberg has learned that the US is pushing to control all major future infrastructure and mineral investments in Ukraine. A draft document grants the US first claim on profits transferred into a special reconstruction investment fund and requires Kyiv to pay for all US military and economic support since the start of the war. Bloomberg's EMEA News Director Ros Madsen joins me now with the details. Ros, what more do we know about this document?
Well, that's right. So this is a document that's been sent to Ukraine, which is the latest version of what it's been called a critical minerals deal, but now seems to be much more of a broader infrastructure and mineral wealth deal, including everything, as you say, from first right of refusal in investment projects in roads, railways, ports, but also oil, gas, and all of Ukraine's minerals wealth, including critical minerals. And as you say, first right of refusal on those projects, the first in line to get the profits from those projects, and essentially saying, you know, we've paid you enough already to support you in the war. So our investment in this fund is already there. So now it's up to you to pay into this fund. So it's a high level of control, potentially, for the US over Ukraine's mineral wealth, oil and gas, infrastructure, and its economy in the aftermath of a war that's still going. And so what does that mean for Ukraine? Well, Ukraine would have to be very much the junior partner in all of this and essentially having to send a lot of money to the US, but also, as you say, squeeze Europe out entirely. I mean, Europe saying they're there and ready to help in the reconstruction of Ukraine, future investment in Ukraine, of course, an economy that's been devastated by this war, and will need a lot of money to get back off the ground again, and saying, Europe, you don't really have a role in this. The question is, where does it leave Ukraine? Is Ukraine prepared to sign on to this? It seems as though at this point, the feeling from the administration in Kyiv is they don't have a lot of choice.
OK, so we watch for how those negotiations continue in the days and weeks ahead. Meanwhile, Vladimir Putin has been very clear, hasn't he, Ros, that he doesn't want to see NATO troops on the ground in Ukraine. France and the UK have pushed back on that. But now, reportedly, the Russian leader suggesting that a UN-led transitional rule in Ukraine could be something that he would favour. What do we know about that?
It's a very odd comment from the Russian president. Was he suggesting UN-administered rule in areas of Ukraine that Russia controls territorially? He seems to be suggesting the central administration in Kiev, which, of course, is a democratically elected government. This is not an emergency government put together in the middle of a war as a wartime administration. This government was democratically elected. And the president, Zelensky, has pointed out that under the constitution, given martial law is declared in Ukraine, he cannot hold fresh elections. So the question is, what exactly is Vladimir Putin suggesting here? That Zelensky steps aside, the UN comes in, and at some point under an arrangement that Russia is involved in, there might be fresh national elections in Ukraine. You can imagine that being extremely unpalatable to the people of Ukraine. But it's interesting that he's even raised it because, of course, Donald Trump has repeatedly pressed on Zelensky to say, why are you not holding elections? Why are you delaying elections? Of course, again, he can't at the moment under martial law, but suggesting that Zelensky at some point, he even said, was sort of becoming a bit of a dictator by not holding elections. So in a way, this narrative that Vladimir Putin has come out with potentially plays very much into the narrative that Donald Trump has been pushing for some months now. Again, very unlikely that anyone would agree to a UN-led central administration of Ukraine. But just it's interesting that Vladimir Putin has even put it out there in the ether.
OK, and we'll see what President Trump does in terms of his response to that suggestion from the Russian president. Bloomberg's EMEA news director, Ros Madsen, thank you very much indeed on the latest and that Bloomberg scoop around the potential minerals deal and the details within it. Now, a coalition of European leaders meeting on Ukraine, meanwhile, ruled out the possibility of easing sanctions on Russia, this being, of course, one of Vladimir Putin's demands in order to get Moscow to agree to a partial ceasefire.
En termes de soutien de court terme à l'Ukraine, nous avons aussi
We unanimously agree that the time is not right for lifting of sanctions, whatever they are. There shouldn't be a policy of lifting sanctions before peace is clearly re-established.
OK, let's cross over to Paris right now. Bloomberg's Caroline Cornat is on the ground for us, where Macron, of course, was speaking yesterday and hosting this meeting in the French capital. Caro, another summit done, led by European leaders, led by the French president. Where does this all leave Europe when it comes to the question of Ukraine and how much support they are able to commit at this point?
Yeah, in fact, it was the fourth summit in that kind of format. You had the London one, you had the French one before Emmanuel Macron went to Washington and Keir Starmer went to Washington last month. And you had these military chiefs also meeting in Paris a couple of weeks ago. So clearly Macron is trying to take the lead here in getting Europe back to the negotiating table. But there was no concrete, really, proposals apart, as you mentioned, from the fact that they agreed they would not lift any sanctions on Russia before any ceasefire in the Black Sea. That's been one of Vladimir Putin's demands, to give Russian banks access back to the SWIFT banking system, which is headquartered in Belgium. Macron repeated that Russia did not have the right to dictate any preconditions to a ceasefire. And instead, the UK Chancellor, Keir Starmer, said that they actually discussed how to increase even more economic pressure on Russia. Other than that, there was no joint statement, no joint declaration between Keir Starmer and the French President Macron. Instead, Starmer had a separate press conference with Volodymyr Zelensky in Paris. Zelensky, who spent 2 days in Paris. Other than that, they said they're going to accelerate the disbursement of 18 billion euros to Ukraine, but they were still divided on exactly the peacekeeping troops, what it's going to look like, exactly who's going to be part of these peacekeeping troops in Ukraine. You know that Poland and Greece, for example, are still resisting. The French and the British are going to send, that was announced yesterday, a mission to Ukraine over the next few days in order to perhaps make more concrete proposals in 3 to 4 weeks. Finally, I want to mention to you, Tom, even though, of course, that wasn't the main topic of this Ukraine summit in Paris, Macron, of course, was asked about U.S. tariffs during the press conference. And he said clearly at a time when the U.S. is asking Europe to do more on defense, more investments to protect themselves, it clearly was not the right time, was not a great idea economically and politically, because it does create, he said, inflation and could break the supply chain. Even though, of course, France would be much less impacted than Germany, for example, when it comes to auto tariffs. They could potentially be very much impacted if Donald Trump implements his threat of 200% of tariffs on wines and champagnes.
OK, Bloomberg's Caroline gone up in Paris on the reaction, of course, to the Trump tariffs and, of course, that tension between tariffs and that need for additional military funding from Europe. And the latest in terms of that summit. Caroline, thank you. Investors, meanwhile, cutting back risk ahead of President Donald Trump's plan to announce so-called reciprocal tariffs on April the 2nd. Boston Fed President Susan Collins says the inflationary impact of tariffs is, quote, inevitable, but it's unclear how long it will last.
Looks inevitable that tariffs are going to increase inflation in the near term. And my kind of modal outlook would be that that could be short-lived with a continuation of some, disinflation, but further in the future than I might have expected before. But there are risks around that. And depending on how things unfold, it may be more persistent and a larger increase.
OK, for how the markets are adjusting around this story, let's bring in Bloomberg's Valerie Teitel. Val, the Fed's Collins, Boston Fed, of course, Susan Collins, steering well clear of the transitory word and talking about inevitable impacts of inflation. We will get a reading of inflation, a bit backward dated, of course, PCE, but we know it's important for the Fed. What are you going to be looking at when it comes to the data out later today?
Yeah, you're right in a way, Tom, that this data print is a bit backward looking because we're looking for evidence of how inflation will be impacted from tariffs. And with this data print coming from the month of February, it's a bit too early for it to show up yet. I think the focus of today's print is going to be on the more spending data, the hints on the consumer that we do get in the personal income and spending bit of today's data print, because we are getting a warning after warning on the U.S. consumer. Do we get some hints of softening in today's print after we got Lululemon delivering another profit warning in their results yesterday, knocking down their full year guidance, warning on a soft U.S. consumer ahead, that stock plummeting double digits in after hours trades. The jitters are showing up in the equity market. They're also showing up in the commodity market. This one really took me by surprise, Tom. The move that we've seen in gold since these auto tariffs have been announced is quite pronounced. A near 2% move in the yellow metal since those auto tariffs. Is this about recession fears? Is it about tariff fears? Or is it one and the same driving the safe haven bid into gold?
Oh, yeah, the gold moves have been significant, haven't they? And the Goldman Sachs call on 3,300 for the yellow metal by the end of the year. The auto story, I mean, the impacts, the ramifications, the ripple effects yesterday across the markets were pretty pronounced.
Yeah, it's interesting to see we're seeing Asian automakers fall for a second day, whether that's the Japanese makers or the ones in South Korea, all suffering losses near 4%, some close to 5%. And this just goes on to say that, you know, the move in the automakers, in the U.S. automakers yesterday was quite pronounced. GM falling over 7%. It was the worst performing stock in the S&P 500. And the auto sector as a whole, the worst performing sector in the S&P 500 yesterday as we digested this news on the auto tariffs. It's really dragged the S&P 500 down. We're now headed for the first quarterly loss for the S&P 500 index since 2023 as month end approaches on Monday. It's also quarter end on Monday, which means we could have some interesting price action right ahead of that April 2nd date.
Yeah, and the stocks guardrail that some had expected around the Trump policy is not kicking into gear, at least not yet. Bloomberg's Valerie Teitel, thank you very much indeed. Now, President Donald Trump's decision to impose 25% tariffs on all auto imports into the US is threatening not just the automakers, but, of course, Germany's economic recovery. automakers being a central part of that economy. Bloomberg Economics says the hit to Europe's biggest economy may amount to as much as 0.5% of GDP. Let's discuss this and look ahead to the CPI data later today with Bloomberg's Zoe Schneeweiss. Zoe, how fragile then is Europe's economy at this point? We have the fiscal impulse expected to come through on defence spending and infrastructure from Germany, and yet the more immediate impact of these tariffs.
Exactly. Just as you said, any fiscal impulse will take some years to feed through. As we know, Germany has agreed to 500 billion of infrastructure spending, and that should be coming fairly soon. But still, getting the workers, getting all these things takes a while. Car tariffs, as you said, hit immediately. And the question now also is what retaliatory tariffs are coming. Generally, the tariffs itself, yes, they'll hit the car makers, but we know they will be primarily the U.S. will be hit with inflation. But then if there's a retaliation, that is one that then actually hurts Europe itself. So that's always one of those things that policymakers need to keep in mind when they think about how strong should we retaliate, because generally the opinion does seem to be Trump's a bully. If we don't retaliate, he will hit us yet again. So we need to do something.
And we heard again from Mario Draghi this week talking about the risks of retaliation as well as Europe weighs up that response. Zoe, thank you very much indeed. As we look ahead, of course, to the inflation data out of many parts of Europe later today as well. Bloomberg's Western Europe economy editor Zoe Schneeweiss joining us in the studio this morning, this Friday. Coming up, China's president makes his latest pitch to boost foreign investment. Is all of this giving Xi Jinping a bit of extra pull with business leaders, given the stability that China is trying to project? The details are next. This is Bloomberg. China's president met global business leaders in Beijing in an effort to boost international investment. Xi Jinping sat down with representatives from firms including FedEx, Standard Chartered, Sanofi and AstraZeneca.
In recent years, foreign investors in China have also been affected by geopolitical factors. We have always believed that maintaining the stability, health, and sustainable development of China-U.S. relations is in the fundamental interests of the peoples of both countries.
Our China economy and government editor Alan Wong joins me now from Hong Kong. Alan, what is Xi's message to foreign business leaders, and is it cutting through?
Well, this meeting is happening at a very interesting time, coming just a day after Trump threatened to impose more tariffs and announced the 25% levy on car and car parts imports. Well, what Xi is trying to communicate here is that China is a force for good and a source of global stability. And it told these more than 40 business leaders from around the world, from the EU, from the US, Japan, and South Korea, that China's growth prospects remain positive and that the country will continue to open its market to foreign businesses. Basically, Xi Jinping is trying to send good vibes to the global business community at a pretty uncertain time. Especially, there were the leaders of BMW and Mercedes in the room, and the sales of their cars in the country went down last year, and the local competition is very keen. And we know that the EU has complained about an unlevel playing field in China and state subsidies for China's domestic industries. So hearing it from China's leader himself might give them some confidence of doing business in China. But whether the message is getting through, I think it comes down to very practical calculations of business. I think the business leaders will have to see any real policy change for them to be able to commit to greater investment in the country.
OK, so that rhetoric from the Chinese leader needs to be matched by policy change as well to build out that space for Western business. What is this? Talk to us about the significance, Alan, of this meeting at this particular moment in time, particularly given the geopolitical overhang. To what extent can Xi Jinping lean into a narrative that China is an environment and an economy of stability versus the instability of the US?
Yeah, the meeting was previously scheduled, and it happened also at the same time last year. But right now, China's export is feeling the heat of the tariffs. So China has to find ways to boost its economy in order to hit its 5% growth target. So by boosting investors' confidence, it might well just help buffer some of that pressure. And also that the domestic demand remain a question, especially for foreign investors looking to sell in the Chinese market. China has made prioritizing boosting domestic consumption as the top priority for the economy this year. So she, driving that home point, may reassure foreign investors that they could still sell to the world's biggest middle class and that their products will still find a very receptive audience in the country.
Okay, Bloomberg China economy and government editor Alan Wang, really appreciate your time. On the back of that meeting between President Xi Jinping and CEOs of a number of Western firms, European and US, and as he said, the automakers, the German automakers, were in the room for that meeting as well. A crucial market, ideally or potentially and arguably more important now than it has been since, of course, those Trump tariffs kicked in to place in the US market. There's plenty more coming up. Stay with us. This is Bloomberg.
Our goal is to reduce the deficit by $1 trillion. From a nominal deficit of $2 trillion to try to cut the deficit in half to $1 trillion, or looked at it in total federal spending to drop the federal spending from $7 trillion to $6 trillion.
Okay, billionaire and head of the so-called Department of Government Efficiency, DOGE, speaking, of course, to Fox News, Elon Musk, with some of those DOGE members sitting alongside him as well. The spotlight on them in the public setting for the first time since, of course, DOGE took their attempts, of course, at cutting back the US federal government. Now, some other news making, of course, the headlines this Friday. Lululemon on the consumer in the US. Shares plunging after it gave a disappointing outlook and voiced concerns about US consumer spending. The company's goods are primarily manufactured in Asia, including in Vietnam, Cambodia and Sri Lanka, according to regulatory filings. CEO Calvin McDonald says US shoppers are keeping their wallets tight because of high inflation and geopolitical concerns. And US Attorney General Pam Bondi has suggested she won't seek an investigation into the Signal Group chat that saw Trump administration officials reveal sensitive military plans to a journalist. Bondi says the episode was a mistake, but no classified information was discussed, and the mission was successful, making the world safer. Prime Minister Mark Carney over in Canada says Canada will fight back against President Trump's trade war but declined to outline specific actions. Carney says his government will respond based on what the US does next Wednesday when Trump plans to announce so-called reciprocal tariffs. Canada has already imposed retaliatory levies on over $40 billion worth of US products.
We will fight the US tariffs with retaliatory trade actions of our own that will have maximum impact in the United States and minimum impacts here in Canada. We will protect our workers and our industries during this difficult period.
Canada's Prime Minister Mark Carney, who says he expects to have a call with Trump in the coming days, potentially coming weeks. We're checking in on the markets. The Prime Minister of Canada also saying that the United States is no longer, and I'm quoting, no longer a reliable partner. And it is clear that the relationship with the United States is fundamentally different. Asian stocks taking a hit on the tariff concerns, down 1% so far in the session, set for the biggest drop in a month. European futures pointing lower by 1/10 of a percent after the losses of yesterday. S&P futures, though, in positive territory, up 1/10 as we count down to inflation data out of the US, and gold at fresh record highs. The yellow metal up 0.8 of a percent. Goldman Sachs says 3,300 is on the cards by the end of this year for gold. Plenty more coming up. Stay with us. This is Bloomberg. Good morning. Happy Friday. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks slide, gold at a record as risk appetite dampens, treasuries edge higher ahead of the Fed's favoured inflation gauge. China's president has been meeting with global business leaders in Beijing in an effort to boost international investment. Plus, a Bloomberg scoop, a draft document reveals the US seeking to control investment deals in Ukraine, squeezing out European allies. Meanwhile, a coalition of European leaders reject Russia's demands for sanctions relief. The markets then, the S&P stateside set for its biggest quarterly drop since 2023. The picture in Europe as well is challenged, of course, on the Trump tariff uncertainty. The inflation data on terms of PCE out later today. European stocks futures then down by 0.2% after dropping yesterday, with, of course, the auto sector and tech under pressure. FTSE 100 futures range bound. S&P futures just pointing to modest gains of 0.1% after dropping yesterday and set still for a week of losses when it comes to US stocks. Nasdaq 100 futures now edging marginally into negative territory. Let's flip the board and have a look cross asset. We've seen a bit of move into treasuries, but of course we can expect possibly some volatility leading up to and around the inflation data out later today in the US. The Fed's Collins saying that it's pretty inevitable that Trump's tariffs will be inflationary. The question is for how long? 4.33 on the benchmark 10-year, euro dollar at 107. Brent trading close to $74 a barrel, but down 0.1%, still set for 3 straight weeks of gains. And gold at fresh record highs, currently up 0.8%, a significant rally in the session today, with Goldman Sachs forecasting 3,300 by the end of the year. Briefly on the Asian markets, pressure still and again, particularly in the auto space. The Nikkei in focus. You've got ex-dividend pressure there as well. MSCI Asia Pacific currently down 1%. HS Tech over in Hong Kong falling 67 points. The Nikkei in Japan off by 1.8%, and the Japanese yen at 150 as inflation in Tokyo ticks up and keeps the BOJ hikes in play. Back to the auto story with details now, because Ferrari shares closed higher. Counterintuitive, some may say, after the company confirmed its financial targets for the year, despite the tariff uncertainty. The luxury car maker also said it plans to raise US prices on some of its models by up to 10% to protect its profit margins in the face of Donald Trump's new auto levies. The Italian manufacturer is the first European automaker to update investors in response to the proposed 25% levy on US auto imports that hit the sector hard yesterday. Here's what Bloomberg TV guest had to say.
Well, one thing we know about the president is he changes his mind back. This is a negotiating tool.
The tariff comments have a very large impact to commodity prices.
He's saying, clearly, this is a critical industry. We can't be reliant on other sport. We have to make it in the U.S. So I think in the case of product tariffs, there aren't really going to be any exemptions, or there's no real negotiations either.
This is going to dramatically affect U.S. auto operations. And I know part of that is intended by the president, who wants assembly to be back in the U.S.
And it actually got enacted. It would be an Armageddon-like, I think, tariff, for the auto industry.
OK, Armageddon for the auto industry. Joining us for a wrap of the latest salvo in terms of the tariff story just for this week is Bloomberg's Kriti Gupta, of course, anchor of the opening trade. Kriti, get us up to speed on where things stand as we lead up to April the 2nd next week.
Well, you pointed out there that the markets are still digesting the auto tariffs and the kind of bid from this week that you started seeing from the Trump administration. The auto sector is so crucial anyway, because not only has it already been struggling from kind of this overcapacity, really, from so many places, bringing back even potential consolidation within the industry itself, but it has so many moving parts and really reaches a global platform. We've talked about how the auto kind of consumption story in the United States is an energy story, a raw material story, but also one that has deep connections to that of Canada, Mexico, Germany, even the UK a little bit, something that Rachel Reeves had talked about and addressed in her interview round yesterday as well, not to mention, of course, the Asian automakers that you were seeing on your screen at the moment. We'll put in Stellantis there as our Italian kind of bid on the auto space as well. So this is crucial as the kind of, as you said, opening salvo. We should also mention that when he was initially threatening these auto tariffs, he talked about pharmaceutical tariffs as well. We haven't heard that piece of it yet. And pharmaceutical is, of course, also a really big piece of the European ecosystem as well, from the Scandinavians to the likes of Novo Nordisk to the likes of Sanofi over in France as well. So there are a couple of other sectors that are potentially coming down the pike. And that's going to be really crucial in terms of how you do it. I think from a market's perspective now, you are starting to think about this as, is there a tariff premium baked into the way some of these stocks or bonds for these companies are trading?
Yeah, really good point in terms of what could be happening in terms of the sector-by-sector basis. To what extent is the auto story a template if you're an investor in pharma names in Europe? And do you want to start putting in similar pricing action in expectation of a similar game plan coming through from the Trump administration? Talking of which, April the 2nd, the language around this, the signalling has shifted. Where do we stand on what to expect next week?
Well, we're wondering where what the math actually looks like here, because all we really know is that not only are reciprocal tariffs coming, but they're going to be calculated by not just barriers that are already existing from a lot of countries, including kind of protectionist measures that are pre-existing for decades, but also what Donald Trump calls non-tariff barriers as well. That looks like VAT, that looks like regulation as well. The question for a lot of investors, and I think for a lot of economists and analysts, is how do you quantify the impact of regulation? For example, tech regulation is a great one. So one of the big questions here is that if you do get an X amount of tariffs or reciprocal tariffs as it's being called on April 2nd, what levers can the UK, can the EU, can China, can India actually pull, especially right here in Europe where regulation is such a big one? Another follow-up question to that is also if the end goal of these tariffs are to ultimately bring down the regulation that American companies feel abroad, if they successfully do that, if somehow you see European regulators pull back on some of the red tape for international companies, does that mean the U.S. will do the same? Does that mean the U.S. will pull down the tariffs? And that's the signaling that we haven't gotten yet. Yeah, and just one example of the challenge around that is how the UK is approaching the digital services tax and whether or not we walk that back in order to try and appease the Trump administration. That's just a microcosm of the wrangling going on, isn't it? It's across nations as we wrestle with the tariff impact. Kriti Gupta, thank you very much indeed for breaking it down for us. Of course, anchor of the opening trade. Now, oil heading for a third weekly advance, a little softer in the session, but still on track for that third weekly advance as the market braces, of course, for more tariffs from the Trump administration due early next week. Let's dive deeper into the energy space with Sara Vakhshouri, founder and president at SVB Energy International. Sara, thank you for joining us. What are the fundamentals underpinning this global oil market right now?
Great question to start with. I do remember that we have this discussion of fundamentals multiple times together at your program, and we had looked at how different market projections and predictions, which are basically frameworks of interpreting data, had divergence, for instance, in the case of OPEC and IEA. We also covered sentiments, which is market psychology, and how the market sentiments leaned towards some of these framework or projections over the other one. Like, for instance, at the time of high geopolitical risks last year, that market was mostly focused on lower demand. But now we are at the phase that I call it a step zero, which it's not anymore about divergence between different projections, but is not knowing what facts actually are. We don't know. The market doesn't know what most of the facts actually are. And this is mostly due to rapid and often contradictory policy shift in Washington, D.C., which it's very hard to determine and understand which ones are actually negotiations tools and which ones are actual policies and how it's going to impact the market fundamentals.
Yeah, and those questions clearly remain. Maybe we'll get some more clarity next week after the tariffs that President Trump is expected to unveil. What is your expectation, though, at this point? What are you modelling, Sara, in terms of the constraints on supply from tariffs versus the impact on demand for softer growth?
So naturally, the tariffs could have two different impact on the fundamentals. One is the inflationary factor and negative impact on the demand. But it also, for producers, let's say in the United States, it increases their capital costs. So that is, again, not helping, is de-incentivizing the investment, increases their cautious for investment, especially at the time that also the administration, while is trying to encourage the producers in the U.S. to produce more oil and other resources, energy resources, they're targeting low oil prices of around $50, which, again, this is counterintuitive. So I would say, especially for U.S. investors, this is an extreme uncertain time. And it's very hard to have long-term investment, at least this year, or medium term investment plan in this uncertain time.
How much clarity do we have on China's forward-looking demand for oil, Sara?
So again, this year, most of the projections and expectation is that Chinese demand is not going, at least for, let's say, some of the liquids like gasoline has already peaked. They're expecting that as we are moving toward passing the summer, which naturally the demand increases, toward the fourth quarter, the demand, especially for China, is going to reduce a bit. If the tariffs go in place, U.S. economy might start reducing and again having low demand. So I would say again there are a lot of shifts, especially in terms of geopolitics. Things change, things are moving so fast. I would say among all these chaotic uncertainty and environment, OPEC remains the anchor of certainty, and this lies within their measured decisions, regular monitoring the market, and the production management that is very cautious. So I would say that that's the only anchor of certainty as of now that we can look into this extremely uncertain market, that all this uncertainty, as I said, it lies within what are the facts.
Okay. So OPEC is providing that anchor. So the assumption being that OPEC, they go ahead then, Sara, with their plans to increase output next month. You're pretty convinced that plan is still in place?
If things doesn't change tomorrow or day after tomorrow, of course, if things are same as in terms of market fundamentals, yes, the decisions that OPEC has, which was even before set before months before the new administration take office, yes, going in terms of what has been planned. But again, I would say that certainty that comes from OPEC and its stabilizing influence is because they regularly monitor the market, and the decisions are market driven. So if things don't change drastically regarding to market fundamentals, yes, I would expect that.
Okay. Always valuable insight. Sara Vakhshouri, CSVB Energy International, founder and president. Thank you very much. As Brent is currently just down a 0.1%, closing in on $74 per barrel, but still set for a third straight week of gains for oil. In corporate news, Deutsche Bank's CFO, James von Moltke, is stepping down next year and will be replaced by Raja Akram. Akram, who is currently Morgan Stanley's deputy CFO, will join the German lender in October and take up his new role after a transition period. And Deutsche has extended Chief Executive Christian Sewing's contract through April 2029. Another corporate story, this time focused on the game maker that is Ubisoft, of course listed over in France, gaining in pre-market European trading after the video game maker said it will carve out a unit which includes Assassin's Creed, Far Cry and Tom Clancy's Rainbow Six into a subsidiary with an enterprise value of about €4 billion. Tencent will invest close to €1.2 billion to acquire 25% stake in the new entity, which will hold licenses for the intellectual property of the games in exchange for a royalty. Tencent, of course, one of the world's largest game producers and owners over in China. Coming up, a flexible, wearable chip that could revolutionize how we use semiconductors in everyday products. That is the promise of UK chip maker Pragmatic. We're going to speak exclusively with the company's CEO to find out more. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, CoreWeave has raised $1.5 billion in a heavily downsized IPO. The cloud computing provider sold 37.5 million shares at $40 a piece. That is down from an initial plan of $47 to $55 each. CoreWeave was an early adopter of NVIDIA's graphics chips and is building out data centers to offer AI-linked computing. And semiconductors are being added to more and more consumer goods to help us track products and gather data. One of the UK's biggest semiconductor firms is promising to make chips here in the UK that are cheap, sustainable and flexible. Here is the latest. I have the latest product, in fact, from Pragmatic. Hang on, hold it up for the audience. This is a semiconductor wafer from Pragmatic. The CEO joining us now, David Moore. David, good morning. Thanks for taking the time. So the wafer I'm holding up contains tens of thousands of these semiconductor chips. You've launched a new product line, David. What is the potential of that new product? Where is the demand?
Good morning, Tom. Great to be with you. So what you're sharing there is one of our 12-inch 300-millimeter wafers that's come off our production lines here in the UK. We ramped to production. That's the first ever 12-inch wafer fab in the UK, and certainly the first ever flexible chip wafer fab globally. Pragmatic Semiconductor is a world leader in flexible, ultra-thin, low-cost, low-carbon footprint semiconductor technology, and we were really excited to launch this week our NFC Connect product line. That's going to bring near-field communication capability that's ultra-thin, flexible, which means we can integrate it seamlessly in virtually any product. It's also cost optimized and has a really low carbon footprint, which means that we can expand the market for our customers, really increase the opportunity for increased consumer engagement, authentication of product, anti-counterfeit, visibility to the supply chain, etc. But we see the applications extending into, health monitors, wearables, and of course, toys and games and other areas as well.
Okay, so extensive potential applications. David, are you locking in orders for this product now? What is the demand looking like, and where is that demand coming from?
Yeah, so demand has been extremely strong. As we've been ramping the fab, we've been building that demand mainly in the consumer, healthcare, and industrial spaces, really underpinning a lot of that swell on AI and Internet of Things. In terms of near term, we're looking very much at deploying this into smart packaging. So we have world leaders in the RFID, radio frequency identification, near field communication space, such as Avery Dennison and Tagios, who are excited to bring this sustainable, ultra thin form factor to bear to bring item level intelligence across a wide range of their customers in the smart packaging space. Examples there would be Amcor, who are a leader in smart packaging for consumer goods. They're looking at the sustainability benefits, consumer engagement, all the way through to brands in apparel, in pharmaceuticals, food and beverage, and beyond.
Yeah. David, what does this mean for revenue targets for Pragmatic through the end of this year? Give us a sense of what you're aiming at.
Well, we're obviously, our revenue growth. So on the back of our Series D investment, we've been expanding capacity, really ramping those first 300-millimeter lines. And so 2025 is a big year for the company as we really start to, really convert that customer demand for revenue. We're going to see a significant, 5 to 6x gain on our revenues. But obviously, as we look forward and we're expanding capacity and advancing the technology, we see significant revenue expansion opportunity for what is a very disruptive approach to semiconductor manufacturing and technology.
Yeah, and clearly, look, this is a capex-heavy industry. You've had to spend a lot, so the losses in recent years have been there. You've had to take those losses. When does that story turn around then, David? Is that a this year's story, or is that more 2026, 2027?
Yeah, so as we look at kind of the profile of our strategic financial plan, Tom, it really is around unlocking that revenue in the near term against the significant customer demand globally. From there, kind of really looking at driving obviously our forward costs down, and then in the next 2 to 3 years, kind of getting to points where we're kind of at a break even and free cash flow generation. So certainly investing ahead today, but against a very, very firm and committed global customer demand. And I think, in line with a very, very compelling value proposition that, again, is very disruptive in the industry.
David, you come from a background at Micron, at Intel. You have that deep experience. What is your view right now on the manufacturing potential of the UK? What can the UK government do specifically to aid your industry?
Yeah, I think, obviously there's been a ton of, I'd say demand and push for localization of supply and, diversifying the global supply chain, particularly in semiconductor manufacturing. I think absolutely the UK has a role to play here on the global semiconductor stage, both for the resilience of the UK economy, but also, too, in terms of driving some of the growth. And so I think a really big opportunity in the UK coming up is the industrial strategy. Advanced manufacturing, as I said, right at the top in terms of the opportunity the government has to invest in high potential growth areas for the country. I think, certainly semiconductors, no one can argue, probably the most advanced manufacturing there is out there. And I think there really is an opportunity to look at how do we provide the right support for the industry to grow. Pragmatic is going to be driving growth of 500 jobs plus over the next years. That's direct jobs, let alone the indirect ecosystem growth in terms of employment. But most importantly, playing a role in that global stage. Obviously, resilience of supply in the current environment has never been more strategic and more important. And, the government looking at incentivizing that capital investment, but also looking at other things, energy costs, the skills pipeline, elements like that, Tom, are going to be increasingly important as well.
David, we've got just seconds left on the clock, so I've got to let you go. But before I do, what is the value of this wafer, David, approximately?
Well, it's going to depend on the application. So basically, some applications you picture consumer electronics where that form factor is so unique and there's no alternative, such as silicon, that can match those kind of flexibility and thin, bendable form factors. The value is going to be very, very high to those customers. So it really does depend on what you're doing with it. But essentially, the breakthrough here is in the ultra low carbon footprint of that form factor and enabling applications where silicon just couldn't play before.
OK, Pragmatic CEO David Moore, thank you very much indeed. Didn't have time to talk to you about tariffs, but maybe next time. We appreciate your time on the latest product launch, of course, from the semiconductor manufacturer here in the UK. Pragmatic. Appreciate it. Thank you. There's lots more coming up. Stay with us. We'll set you up for the PCE data out of the US later today. This is Bloomberg. Happy Friday. It is Personal Consumption Expenditures Day. Hurrah. That is the data point out of the US later today. Markets, of course, in focus around this data point because it will give clarity in terms of the inflation trajectory for this US economy. The expectation it comes in at 2.5%. The biggest component is services. Within that is housing and autos as well. We'll see, of course. We know that auto prices have been picking up, and those are expected to gain again, of course, in the weeks and months ahead as a result of these tariffs. 2.5% is the top line. It's expected to underscore that decision by the Fed to hold in terms of policy back in March. But to what extent does it reshape expectations on the inflation front when it comes to the US? That is out later today. We'll break it down for you, of course. Now, switching focus, Bloomberg.com has a brand new game for you. Yes, Pointed, the news quiz for risk takers. Use strategy and savvy, it says here, to navigate our handcrafted trivia questions about the week's news in markets, politics, luxury, culture and more. The more you know, apparently, the higher you score. Bet big on your favourite categories. Double down, even triple down on your answers. Play Pointed for the first time ever at Bloomberg.com. You can brag about it, your high score, and share your results with friends and online. I tell you who's going to be really good at this. The opening trade team. They're coming up next. This is Bloomberg.